Hi, welcome to the Market Alert for Wednesday the 27th of January 2016. And in yesterday's pre-market session, we saw the market moving lower, nice sell signals all the way down there until we got around to 8:30, and then we see this bottom coming into the Dow. Notice the increase in volume. I wouldn't normally put this on, but there's a few things I just want to highlight to you that was going on behind the scenes yesterday. And this one was the first. We see the overnight futures contracts pile into the market at this level, and then we see the market put in its low for the day and then start to move higher in the pre-market session here. So you see the market moving higher, and once it gets this momentum behind it, it's just marking prices up. There's no new buying in this market. There's the odd peak here and there, but other than that, this market is just moving higher. And if there is an increase in volume, it's likely to be from those that are short being squeezed out of their positions because of the losses and having to get out and realize those losses. This is what adds upside momentum. It's also what's known as a bear squeeze as well. So we see the market moving up. We get a bit of a reprieve at 12:35. Then they wheeled out Carney, and he only had to utter anything about central bank intervention, which is what's ruined these markets. We've gone from a stock market that's based upon corporate earnings now to being run by central banks. Fact number one. Number two, they want to keep this illusion alive, and they will do absolutely anything to get those prices back up, especially as we head towards the August lows, which I've spoken of before and yesterday. So they reversed the market, moved it up. We get the odd reprieve on the short side, but other than that, the market moving strongly to the upside, again being manipulated, prices being marked up, and eventually we get a buy signal here, the market going up, managing just barely to get 20 points out of this one. And the reason the market struggles in this area, or started to struggle, was this in the daily chart. You've got this resistance here at 16,136. And the market desperate to drive through this, and this is why the market sat sideways for the best part of half an hour or more, then eventually trading up to the 16,150 before heading back. A lot of strength in the background, 400-point move in the pre-market and the first part of the trading session. Just as we head towards the quiet part of the session, there is a short trade. This market doesn't want to go down. Every short along the way yesterday was really struggling. The only way you can take a short trade when you've got this manipulated strength or perception of strength in the background is to wait for a second sell signal, which we see later on in the start of the evening session, because the market then will have exhausted itself. Trying to fight the trend earlier on in the session is not a good idea, as this one was shown to be. And again, the reason I've put the volume on is I just wanted to show you how this market was really rigged yesterday. You can see the market there putting in this big bar to take out this short trade with a loss of 40 odd points, because they deemed it necessary just to drive the market higher. As I sat watching this, I thought, this is no way this is going down. They just do not want the market to go down just yet. They want to keep this perception that everything's fine. They want to keep it above that 16, this level here, 16,136, which they managed to do for a while. And then we see the market coming back, retesting and going higher. This actually was a winning trade, and I do have the recording of the whole of yesterday's session, and this one actually went up to the scalp level. Then it created a double top, and then we had the short side coming in. And again, like I said earlier, after 25 years of watching these markets, you can't fight. It's very difficult to fight this sort of background activity that you see, where you get a massive move of 400 points in the background. You get a central banker moron come out, talk about printing more QE that the taxpayer will have to fund and future generations, and that's enough. That's, all he's taking care of is his mates in the banking industry, and you see this as a result of it. It's any central banker at the moment that they wheel out and who speaks the market will react positively too, because they don't want to see the market go down. There is a protection reason there as well, of course, because they have a vested interest in looking after their friends on Wall Street and also in Canary Wharf as well. So once the market's exhausted itself, it's then able to come back, and again you can see it only coming back around 60 points, 70 points max, giving only the potential there for around 20 odd points as well, and the same there, back down for another 20 points. So a very frustrating day. Even though it looks good on the chart, it was quite frustrating because of what was being manipulated in the background there. On the overnight market, prices have come back. Had a nice buy signal here, followed by a nice sell signal. There's another short there, of course, which is failed. The market sideways, and now we've moved up to back up to the 16,100 level. I think that is, it is indeed. And now the market putting in a sell signal there to try and move lower. And the reason for that, of course, is the China effect, which we'll look at in just a moment. So in the daily chart, the market's still flirting with this 16,136, could take it out. And the reason I say that is that we've got the FOMC meeting this evening. So the Federal Reserve are going to utter their first words on what has been happening of late. Expected to keep the rates unchanged, of course, because they increased those in December. Can't see any more rate hikes in the near term personally. More like they're going to actually print money by at least the end of the year. No doubts about that, because this is only going to get worse. So news at 7 p.m. Don't be in the music. Be in the music. Don't be in the market for this one when it's released at 7 p.m. And talking of the China effect, down 2% again to 2006.94, the lowest it's been for a very long time. And again, you can see that from the 5-year chart. We're heading down to the 2000 level. I've no doubts about that. And that is more or less a given, because we've just got a debt-inflated bubble here in the stock market, the same as we have globally. That bubble has been burst thanks to Yellen's 0.25%, and now the market can't even handle that, so it's not going to handle any further rate increases. And there is a chance that we could go to negative rates as well in the US, is what I'm talking about. And in the implied volatility, down 19.92, which you'd expect after the market's been manipulated to the upside there. This pulling back, again giving the market a chance to breathe before it makes its next move to the downside. Right, that's it for this morning. I will see you in tomorrow's edition of the Market Alert. As ever, thank you for your support and also for watching. See you in the next one.